Hello everybody. Today we're going to be looking at the company Games Workshop from an investment perspective and why I believe only a heretic wouldn't rate this company as a buy. Let's do it. Okay, so what we're going to be covering in this video is my position, disclosures in general, the history and the future of the business as I see it, a summary of their last trading update, which has caused a pretty steep fall in the share price this week, so let's do that. Risk and opportunities moving forward, analyst guidance as well as my price targets for this company, and lastly wrapping up with a conclusion. Makes sense, I think. Alright, but before we do that, this year I'm planning on doing a few more of these stock reviews. They take significantly longer than my other videos, which basically use automated portfolios more or less, and then a kind of neat format. These things take a few hours, as anybody who's done one of these will know. But I am starting to get asked now to do them, and I'm starting to want to do them myself, so that's pretty cool. And what I'm really asking for is whether there's any shares that you'd like priced, a similar video for a company, etc, etc. And I thought, well, rather than just making it free to the world, I'd put a couple of options down. So basically comment down below if you'd like a stock review on any of these videos, and basically whichever one has the most comments / upvotes, whatever happens, that'll be the one I do next. So here are your choices. Amcor Technology, this is a holding I got into quite recently in the semiconductor space. Next up, BAE Systems, this is a defense stalwart, UK listed. Next up we have CACI International. This, in my opinion, is basically a less extravagant, less well-known version of Palantir, less hyped and goes completely under the radar. I do have a very small holding, by the way, in CACI and no holding at all in BAE. Next up we have Cerillion. This is a fairly small company, but right in my technical wheelhouse from a career perspective. This is basically a telco CRM system provider. Next up we have Enterprise Product Partners. This is a midstream pipeline business in America. I used to have a huge holding in this, recently sold down. A big dividend play for those interested. Next up is my largest holding, National Express. Perhaps people are interested why I like this company so much from an investment point of view. And last but not least is Restaurant Group, which unsurprisingly does restaurants. And again, for anyone interested, maybe that's for you. So either name or number will work for me down below. Otherwise, let's get on with Games Workshop. Alright, so this is my unrealized position as of last Friday, the 14th. I have owned Games Workshop before profitably, so my net position is minus 226. My unrealized is currently minus 726. I've got just a smidge under 70 shares at an average price just under £96 a share. That's where we currently are. In general, I view Games Workshop as a business that basically for the last 5 years is one of the best performing stocks in the FTSE 350. It's up something like 1800% without dividends and 2300% with dividends, so very impressive. That said, I personally recognise the challenges. It has been an expensive stock. You could argue it's got ahead of itself. Whether that is the case, we'll find out soon. This holding represents about 5% of my portfolio, and really for me, before I kind of put more money in, I wanted to start looking at whether Games Workshop was different to the company that I bought previously. Is it a company I still want to be in indeed? Whether it's a company I want to have more of my portfolio in. So that was kind of the reason for this video. And actually, as I researched this video, it really crystallized my point of view. Spoilers, I guess it's in the title, but I'll explain how I arrived at that view, because it wasn't really a foregone conclusion, to be fair. And yeah, that's really the purpose of this. So let's see if I can convince you of the same. Alright, so an overview of Games Workshop for anyone who's not familiar with it and maybe wants a recap. You're looking at a mid-cap UK listed company, market cap around the 3 billion mark, which puts it one of the larger members of the FTSE 250, originally listing in 1994. It's in the consumer cyclical segment as recreational products, and it's best known for the Warhammer Universe and its variants. And it does also produce Lord of the Rings tabletop games and models, as well as a few other things as well. But really, you're talking Warhammer here. Although the company began in the UK and has been headquartered in Nottingham since 1997, 70% of its revenues are from outside of the UK. That number was actually much higher than I expected. Its international expansion has definitely got up and running. We'll see later that they're still getting the logistics oiled and working properly, but that was surprising to me. The company is a vertically integrated business, so it controls everything basically. I would argue that it's pretty hands-on as far as companies go. It doesn't like letting go of control, for good and bad, as we'll see, but it controls all aspects of manufacturing, design, retail, and IP and legal control as well. Revenues are mostly from miniatures. I've taken this from their website, but basically miniatures are sold to be collected, modelled, painted and gamed with, to use their wording. It's supported by, honestly, just a ridiculous amount of lore. There's so many worlds, cultures, races, history within Warhammer. It kind of gets a bit of a free pass as well in terms of like any inconsistencies in its lore, which, by the way, it takes incredible pains to not have. But because of the kind of nature of the universe that Warhammer is in, any kind of like discrepancies are just forgiven as being historical inaccuracies within the universe, right? Or, you know, heretical or hearsay or etc., which is kind of cool in a way, and yeah, pretty consistent from that regard. I would say though that although a lot of its historic revenue and even today is derived from the sale of miniatures, an increasingly important part of the business is going to be royalties, which traditionally GW, and by the way, I'm going to use GW and GAW interchangeably here. GAW is the stock ticker, GW is what everyone else calls them. You know, the fans, the company themselves refer to themselves as GW, Games Workshop. So I'll use GAW and GW interchangeably. Traditionally, GW has argued is a gateway to the hobby rather than, you know, like the earnings. So it's basically like not quite a loss leader because Games Workshop doesn't operate like that. But, you know, you can go back as recently as a year ago and read what they were saying about, you know, royalties, and it's very much a case of, oh, you know, this is to get people into buying miniatures. But that's starting to change quite significantly, and, you know, you'll see why when we get to the financials. Today, like I say, Games Workshop, 3 billion market cap company. It sounds kind of weirdly quaint aspirations on the website, you know, it's to make the best models in the world. Okay, but this is genuinely a really serious business. You know, it's like saying that Hasbro or Marvel, you know, like they're like comic books, right, or toys. Now, this is a serious business here, despite the fact that it's just a game based on, you know, a fantasy universe. It employs 2,500 people, runs over 500 stores worldwide, earned 122 million for the latest financial year, which is the calendar year for them, and it has a serious amount of stories, games, and even a streaming series in the works. So yeah, this isn't like a Mickey Mouse gaming company. This is a serious business, and we're going to treat it that way moving forward. Alright, so I wanted to start with the summary of the update on the 12th of January that basically caused the share price to go down as much as it did. I did think about the right way to do this. We're going to do numbers second, and what I'm going to do first of all is spend the next few minutes just explaining, giving an overview of that. Basically, it was a 20-page document, so it wasn't particularly long, but it's also very thick, wordy, not particularly pretty. It's just walls of text. So I've read through it, I've pulled out what I think are interesting points, and we're going to start with those before we get to the financials, both in that update and comparing across the 5 years beforehand. So that's the plan. So to start with, I would actually say that broadly speaking, the numbers were good. Maybe good is pushing it a little bit, but okay at least. But the problems were, and the reason why the share price reacted in the way they did, there were clearly pressures on margin and also a change in the focus of where the revenue was coming from. So what this really translated to was a reduction of £15 million in non-royalty income, which Games Workshop themselves refer to core, against an £11 million increase in royalty income. Net profit was down by 3 million to 88 million, and EPS down there as well. So that was the reaction basically. Now, I would say in fairness that these are against really tough comparables. 2021 and 2020, sorry, was a great year for Games Workshop, but the market obviously expected more. Games Workshop themselves also flagged increases almost across the board in terms of cost. Significant, genuinely significant increases in the number of staff as they ramp up scale basically. Those staff were being paid more, got given bonuses, which is a bit of a policy for Games Workshop. They have a kind of 3% annual pay rise escalator as well built into it. Then you've got freight costs, raw material costs, warehousing costs are notably more expensive this year. Admin costs, you know, there's a VAT receipt back date from there as well. They put it all in there basically. Costs are up across the board. On a more pleasing perspective, the investments are also extremely impressive / expensive for the year. A lot of this was expected, although they tweaked one or two things. So we'll start with the factory first of all. So 13% more machines were added. These are things to basically produce the 3D printing, for the figurines, as well as an additional tooling room, as well as 9% more staff were employed in the factory. Had to tease it out of the numbers a little bit where we got there. There was also a CRM and ERP upgrade completed to scale European operations. That sounds a bit, like why am I bothering to talk about that? But a lot of people forget that 2016, like when Games Workshop really got going, they didn't new CEO came in and it wasn't immediate that it just kind of rocketed. There was many months where it wasn't really sure that the new vision and the change of strategy that they had was going to work. One of the things they did then though was basically overhaul their CRM system and their order provisioning system basically, which allowed them to scale in the UK. I'm actually very excited about this because I'm kind of assuming more of the same. Okay, it's not going to be super straightforward to bed in. I'm sure there's differences between the systems, but now it's going to be ready to go, right? So I think this is worth calling out. An online ordering platform kicked off. We'll see in a second that the online ordering actually decreased. It was one of the main reasons why their earnings / revenue struggled and were less impressive than people were hoping for. So that kicked off. It's currently only 5% complete, but they budgeted 6 million for it, and we're currently through 300,000. A warehouse upgrade in Memphis has been completed. Basically, they were so busy in December and January that they couldn't keep up with American orders. So they currently have a £5 million order backlog that they are working through. The warehouse in general will help them with the logistics. Likewise, a warehouse upgrade in the UK was complete, which increased their storage capacity by 5 times. So again, a significant size increase in warehousing there. The warehouse upgrade in Asia was paused primarily to focus on Memphis, and warehouse costs in general were up 41%, which they did label as expected, but still a notable cost increase there. So all pretty notable investments, but there's more than that as well. So just following on from that, they have 519 stores, of which only 34 are not profitable. They plan to run them all profitably. They don't sort of believe in loss leaders or anything like that. They open a store to make money on it. First stores in Asia are due to open in 2022 in Shanghai and Tokyo, so that's pretty cool. Positive improvement in terms of Warhammer community, email metrics, etc. They flagged a bunch of stats here. I would say that I'm somewhat cautious about these kind of things because in my experience they can be gamed in all kinds of ways, right? So there were some big numbers that they called out, right, in terms of watch time and engagement, that kind of stuff. My opinion, by kind of looking at people within the fan base that I kind of trust, is the Warhammer Plus was a little bit disappointing. I think that they could be engaging a little bit better. Again, this isn't a Mickey Mouse company, and I think people were just expecting more. Some of the animation style could be better, but hopefully we are improving. And actually, to be fair, I think Games Workshop themselves know that they need to be adding more content, etc. to this as well. So we'll see how that goes. People, however, are very excited about the community outreach programs, as they've called it. But like these live roadshows, etc., very enthusiastically looking forward to being returned to. So that does sound genuinely like people are excited about it. Likewise as well, there's a ton of upcoming licenses, IP, lore, etc. I think the one most people are most excited about is Space Marine 2. This dropped in terms of one of his gaming conventions, and people go and watch the trailer, right? Just put Space Marine 2 trailer into YouTube. It's freaking beautiful. It really kind of captures the wonder of a Space Marine. The original Space Marine is widely admired, regarded today by the fan base. Everyone's very excited about it. Basically, it's exactly what you want from a company. Treating the lore with respect, and there's a lot of small details apparently in the trailer that people just really warm to, and I mean it's just great. It's a really beautiful trailer to watch. The Total War Warhammer series is also now on its 3rd installment, and then there's a bunch of other stuff as well. Eisenhorn is in development, which for me is arguably one of the more exciting parts of Games Workshop. Eisenhorn is basically an Inquisitor, and without going into too much details, there is a trilogy of books about this character, which are regarded as just great books, basically. Very good story, focuses a lot on the main character, but that's okay. And yeah, people are very excited because this could be the start of sort of a streaming series, and to get that going as well. So that's awesome. I think this is worth calling out. No plans for buybacks or acquisitions. Like I struggle to treat Games Workshop as like a dividend growth company, because they kind of almost like they seem to rail against the idea of being that. They talk about truly surplus capital, but their direction of travel for dividend has been broadly increasing. It's sort of flatlined for sort of in the late noughties, but since then, I mean, last year was a really good year for dividends for this company. But yeah, it's interesting that they specifically called out no plans for buyback or acquisitions, so that's just worth highlighting for me. Other highlights in terms of risks are digital sales are now more than 20%, and they themselves, they talk about things like reviewing IT. They're talking about upgrading their ordering journey. So I get the impression that maybe they didn't respond to this as well as they wanted to, and they're not happy with how it looks at the moment, especially as it's now increasingly important for their business. Yeah, this comment as well, IT strategy and delivery, like there's nothing concrete here, which in a way is slightly concerning, but it's clear to me also that they're not happy with it, and basically they're putting it under review. Like, this is sort of a management team that isn't quite yet sure what the problem is, but they know they're not happy with it. That's kind of where I think they've got to. This, I think, was also really telling. So they class as media management, an area for growth, and then this is especially, exploiting our media channels so they do not harm our core business. It's like, you mean the fact that you've been like very aggressive with the defense of your IP, that you've taken down like these wonderful fan-made videos. I mean, one of the videos, and you might struggle to find it on YouTube now, but if you look at like Astartes, it's a fan-made trailer that's just, again, beautiful. I mean, I can't believe a single person made it. Now, in fairness, Games Workshop apparently did employ the person, but they forced him to take it down, and it was just such a wonderful gateway into the Warhammer universe. And I was like, what are you doing? So it's very strange to me, and yeah, it has been strange to me that a company as big as this basically has zero social media presence, right? They turn off all comments. They're basically absent from any social media, and I think they're basically just behind the times and haven't really caught up with the fact that they have, expanded 20 times in 5 years, right? 5 years ago, this was a 150 million pound company. It looked very different, and it's just like they haven't quite caught up with the reality of operating in a world where your customers are pretty important and want to be engaged with. So there was some encouraging movement, actually, because they are now finally setting up such a team, so they go into detail on that as well. People might or might not care for this. They want to start looking at social responsibility. To me, this is not strictly necessary, but again, this is like, there's a certain expectation for a company of this size. This is probably it. This is like a senior manager, not like board level, but the one underneath, is how I interpret that. Fine. And again, I also thought this was interesting as well. Like most companies, when they do these things, they have like an area of risk, right? What's going to happen in the future? Their biggest risk, to use their words, not mine, is senior management becoming complacent. And again, to me, that was pretty telling. Like that to me is like either a CEO. This was a CEO comment, or the board itself. Not happy, like they missed something, right? Like they rested on their laurels, they didn't factor something in, and I thought that was really telling as well. So yeah, like reading between the lines, and I've pulled out just a couple of things here. Obviously, feel free to go and read it if you want. It's on their investor relations page, but I've done it so you don't have to. But to me, this was a company that, like, in one way was like relatively pleased with their performance, and kind of explained why it was less good than they would have liked. But then it was also a company that was like, yeah, we kind of know that there's some things here that haven't gone to plan, some things that we need to improve on moving forward, because, we need to respond a bit differently. So again, depending on how you want to interpret that, for me, I think it's the appropriate level of concern. Like, again, I think the management team deserve a lot of credit for transforming the business over the last 5 years, but they also need to realise, and I think they do realise, that maybe the last year they haven't always optimally responded, and maybe there's some improvements moving forward. But there's a lot of investments here that I'm actually really encouraged about for the future, right? The fact that they're having to upgrade their logistics, they're ordering to these kind of degrees. I mean, 5xing the warehouse space in the UK is ridiculous, and likewise, plus 10% more staff in the warehouse as well. So they're throwing money at these kind of things that are telling me that they're getting busier. So again, hopefully that's a good thing. The fact so many of their retail stores are already profitable again again is a good thing as well. Like, they call out the fact that, you know, they're not happy with the fact they still have 34 not making a profit. I'm actually really encouraged that, you know, it's like, it's such a, you know, above 90% of their stores are profitable already. So that to me feels really good. So this is the update, the words that I pulled out from it. Let's have a look at the numbers though as well, because I think they are still worth talking about. Alright, so I've just taken this again likewise from the 20-page document, and then I've just called out first of all here a couple of things that they've added. So sales are up 6%, fine. I thought this was kind of interesting though. So trade up 8%, retail up 17%, and again, I mean, these are going to be softer comparables, right? You're talking year on year effectively here. And likewise online minus 7%. Now again, maybe that's against tough comparables last year, but not really. I mean, online is 20% of their business, sure. But to me, I think again, it indicates the fact that, okay, probably people would rather go and spend what can be quite real sums of money in store. The way that they design their stores as well, like basically the people they hire are paid very well comparatively to, you know, people who run stores, but they're really expected to know the subject matter, right? Like they hire very passionate and very informed people. So I can imagine that you would want to go into a store and talk to somebody if you're going to spend, and, you know, given the option it's there. But again, here you want to make sure that you're making it as easy as possible for people to spend money. So I thought that breakdown was pretty interesting. Gross margin going down 6%, but it still remains at 70%. So I mean, this is still a very margin heavy business effectively, but definitely worth calling out because they have managed to get their gross margin up to 76%. And from their perspective, significant changes to pre-royalty income, so again core but pre-royalty, blamed on tough comparables primarily, as well as the kind of increases in costs. But they still flagged the fact that this is the second highest and best performance that they've had of all time. So okay. So yeah, I thought that was, I just wanted to call that out basically because they kind of, you know, comment on it themselves. What I also want to do, because I think the table mostly speaks for itself, that hopefully there's no surprises here compared to what we've already spoken about. Obviously there's a big drop in terms of cash generation, right? Most of that's going to be a reduction in the earnings, but there's also kind of significant investments, as well as, like I say, an 8-figure VAT charge. So that's also notable. However, just for some context, across 5 years, revenue is up 123%, profit is up 293%, EPS likewise the same. That's good to see. Dividend is up 194%, and again, they talk about dividends like they're not really bothered about it. You know, we'll do it if we got spare money lying around back of the sofa. But the yield is actually quite significant. 2.7% is no joke. Especially for kind of what is still a growth company. To me, it feels like this isn't like a mature company at this stage. So I think that's worth calling out basically as well. Obviously, you know, because of their dividend policy, they're not committing to doing anything. So maybe next year, you know, they'll reduce it because they decide they need to overhaul their IT systems or whatever. I don't think that will happen, but, you know, you can't assume that 235 will remain or that it will grow. But I think it's promising that, you know, like that's there, and it's a promising yield. Potentially. The return on investment, 62% over the last 5 years, also 62% over the trailing 12 months. So again, it's an incredibly efficient business. Gross profit's actually been 73% as an average over the last 5 years. So obviously that compares to 76 to the year before, 70% for the last year. So these are still really impressive numbers, to be honest. And then in terms of net profit, again, 28% in the last 5 years, but actually 35% over the last trailing 12 months. So that's also super impressive to me. Oh, and last but not least, current PE is 23. I was surprised by this, to be honest. Yeah, it's cheaper than I thought. Like when I first looked at this, you know, it was a bit more expensive. But actually a combination of kind of where their earnings currently are for the full year. Obviously this is just 6 months, but if you do some basic calculations compared to their closing price on the 14th, the current PE is a relatively modest 23, so that feels good for a company of this quality, in my opinion. So not quite as expensive as I thought it was going to be. So yeah, this is currently how the financials look. it's as expected. You know, small increases in revenue, pretty big drop to be honest in overall cash generation, and okay, fine. And profit, like I say, down 3 million. It's not a great update. I don't want to say like it is, but it's also like it didn't really deserve a more than 10% fall in the share price. I felt like the mitigations were reasonable. I felt like the content of the document was fair. It wasn't like they were pretending it was the best update ever, but at the same time they were obviously seeking to defend it. But for me, I think there's a lot of promise in next steps. So we'll see obviously what this looks like, and maybe you have to eat humble pie in a year's time. But that's how I currently feel at the moment, specifically on the financials. Alright, so in terms of risk and opportunities, I'm kind of going to group the first two risks. I kind of think they're the same thing, although it won't be immediately obvious why. So I'll start with upsetting your customers. I mean, like, you can read research notes, you can go onto forums, etc., and you can find a bunch of angry people. But this has been the case for many years. Like, Games Workshop this isn't some new problem where they've just created a scandal. I mean, as we've already touched on, right, they have virtually no social media presence as it is. It's just like their lack of engagement as well as their aggressive defense of IP rubs people up the wrong way, right? Especially when they're the people that are your biggest fans, literally, right? They're the people who go out of their way to make free content for your company, oftentimes, which is extremely good, and sometimes even better than you're making. I mean, that Astartes video is seriously impressive. To me, though, I haven't yet seen that unhappy customers reflect in the numbers, right? Like, the revenue is still up. Like, this isn't a problem selling the units. Maybe it would have been up even more if, a few less people were upset, but I just haven't seen the dissatisfaction with Games Workshop translate into a reduction in revenue. And I think it's massively overblown, if I'm honest with you. It's kind of like, you might not like your drug dealer, but you go and buy them anyway. Okay. And similarly with the rise of 3D printing, like, I actually think this is a bigger risk, first of all, than I think this is a genuine risk. Miniatures are still the majority of Games Workshop's revenue and certainly their earnings. They make a lot of money off it, but, well, first of all, they're still obviously so busy that they've added 13% more molding machines, I think they call them, to make these miniatures. And secondly, I think, like, really, people are going to be more inclined to do 3D modeling if they want to rebel, basically, against Games Workshop, because presumably you still want to engage with your hobby. You're just kind of giving a middle finger to the company who basically does the law and makes money from this, right? So first of all, I think that actually if you sort your community engagement, then you're going to discourage a lot of that anyway. And secondly, I think, like, if you're really serious about the hobby to the point that, like, you're printing these, you're probably painting them over hours, you have to put these things together as well, right? This is a real investment. And then you've got armies of the things, right? So you've got dozens, if not hundreds, of things to paint and assemble and everything else, right? This is like a real commitment. And I think, like, if you're serious about a hobby, you'd rather have the real thing. Like, you have to be really committed to pissing somebody off, to kind of to not want the real thing if you're passionate about that real thing, right? You're basically like buying a fake. Well, you're not buying, you're producing a fake. So I think, like, basically if Games Workshop can sort out their community engagement, which is poor, then I think it will help mitigate the risk with 3D printing. That's my current belief on it, effectively. Cost pressures are also there. I mean, Games Workshop went into this. I think it's fair. They're now an international business. Again, maybe this is kind of just a relative naivety, right? Like, we talk about them being a serious company, 3 billion market cap, but this is a fairly new thing for them. So, maybe they just haven't quite got their supplies sorted. Obviously, there have been supply issues worldwide, freight issues worldwide are really expensive at the moment. A lot of their production is done in the UK, so that should help, at least with input costs. But obviously, they're now selling internationally. And as you'll see in a minute, actually, like their logistics, I'm going to skip to point 5 here, but I thought this was really interesting as well. So this was also from the CEO, I believe. Basically said, Games Workshop have fallen short in this period of getting the right stock to the right places on time, right? The fact that they've got this backlog in Memphis, I feel like they're looking at the fact that they've just missed some opportunities here, right? This is opportunity cost. They didn't have the right stock where they needed it to be because their logistics, their storage, just-in-time delivery didn't work, etc. So I thought that was interesting. And again, I mean, the risks here, it's interesting to me that they called this point out. Again, to me, this is basically a CEO giving his management team a kick up the arse. That's how I would interpret this. And again, my last business, this is exactly what I could imagine my CEO doing of such a business, right? Senior management team becoming complacent. Well, hang on a sec, is that me? What have I not done, right? I'm going to have to look at myself, my own responsibilities. So I think that's pretty interesting as well. So I wanted to put those two in there. Originally, I wanted to do like a top 3 list, and then I thought I'd include those. Opportunities next then. So I also struggled to do a top 3 here, and we ended up with 4. So first of all, I think licensing is an obvious opportunity. I think Games Workshop, again, were arguably slow to realize how much of an opportunity, right? Again, this is a company that's been notoriously aggressive and power hungry, right, protecting its IP. Now I realize it's starting to, be more open-minded to working with games developers, notably. But soon it's going to be a streaming series, etc. about the opportunities of licensing. This really kind of helped their numbers in this report that they produce. So I think licensing is a thing. Again, just go back 1 year, right? Look at the results from a year ago, and they're talking about the fact that licensing is just a nice to have, right? It's going to get people into the hobby. Not anymore. This is now, an increasingly important part of your revenue income. And it's like the language is just tonally different. So I think that's really interesting, and I think they're grasping it. I think it's very obvious to everyone with an ounce of common sense that this is a huge opportunity for Games Workshop. International expansion, they didn't spend as much time on this as I thought they would, and even analysts are a little bit quiet, but I don't really know why, because again, not too long ago this was the real excitement. I feel like people have forgotten the fact that this is still okay, I guess it's no longer getting the majority of its revenues from the UK, but again, it's still got that growth opportunity, right? Like if you accept that this company is a growth company, well, where's it going to grow? And I mean, like, it's got huge opportunities basically everywhere. I would say the biggest opportunities are probably in Asia, where it's traditionally not been. I almost imagine that they'll find a way to bring back a character who was obviously inspired by Asian culture, who more or less got retconned out of the lore, suspected, with like, the lore again, it's been like covered up, but seemingly in a deliberate way, where this person was maybe corrupted or, weak in some way. So I wonder if they'll find a way to bring him back just to kind of help carry that into Asia. Call me a cynic, but if there's one thing you can rely on Games Workshop to do, it's find a way to make money. So I can kind of imagine that. But I mean, again, here, warehouses getting up and running, shipping improving. They've had to sort out their VAT reporting in Europe. And you've got this CRM and ERP system going live as well, right? It's clear to me that international expansion is a great way to bring in more revenue. And next up, we've got streaming. So I wanted to call this out for both Warhammer Plus, where I think it wasn't the best launch. Again, it didn't help because before they launched Warhammer Plus, they decided to go like all aggressive on content creators, and that upset people. So there's a lot of people who were just refusing. I actually checked out Warhammer Plus. It's not as terrible as some of the more aggressive comments I was reading, but at the same time, some of the animations are not what you'd expect from a company that, again, is no joke, should presumably commission this stuff. And again, I mean, if I compare it to like the Space Marine 2 trailer, that's what I'm expecting, because it's beautiful, and just more of the same. Likewise as well, I think they kind of missed a trick. Like if you talk to the Warhammer community, or I haven't, to be clear, but if you like watch and understand where they're coming from, there are characters within that who are like massively respected, and so Warhammer Plus has like a lore channel, right, where they read stories, and the guy doing it is serviceable. But why didn't you just go and get one of these people from the community, right? Work with them, don't stop them doing from what they're doing. I mean, like if you look at like Lutin09, right? If you're interested in the lore, go and check him out. The guy does like 90-minute plus videos. He's a compelling storyteller. I remember I was like listening to a story about One Planet, and it was just about like a military charge, but into like hopeless odds, right? Because you know, it's a grim dark future, and it was like moving, emotional, and I'm not even invested to the same way that these fans are, and I'm like, you know what, go and hire him. I mean, Chuck, I don't even know what it would cost you to hire him, but go and do it. And it's just like there could have been different ways here, to be honest with you. So, but there's some cool stuff on there regarding, like, you know, painting suggestions, how you can do, you know, your miniatures, and that's cool. And likewise as well, more lore, more rules, etc. So that's it's up and coming. I think they should have started it as like more of a nominal price rather than the £5 a month they've done. Because again, you don't get a huge amount of value for that, and I think it was verging on being botched. The whole kind of strategy for launching Warhammer Plus was not good. However, I'm really optimistic about Eisenhorn. Again, this is a cool series. I've read a summary of the books. Oh, I'm sorry, guys, I don't have the free time to read free big books on this stuff. But you know, everyone in the community agrees that they're excellent books. There's some good book reviews if you're interested. Maybe if you do have the time, then go for it. But I suspect this will be very well received. It's a very popular series. You know, and if it does get up and running, it could potentially be a very popular streaming series as well. So that should be super cool in terms of just getting it more out there. It reminds me a little bit of like the Witcher series, you know, which is something which has its fans but wasn't really well known before, you know, Superman came along and basically acted up a storm. And I use that as an example, not just because of that, but Henry Cavill, the guy currently playing Superman, is a huge Warhammer fan. So there's kind of, you know, pretty cool because it just opposes the notion that many people have of the kind of people who like Warhammer. So I think that's worth saying as well. And last but not least, I think they do have a really great product. You know, I kind of like listen to some of these Warhammer channels, right? I like Luton09, also really like Major Kill, as well as Lord Wolfrow. So if anyone's interested, those are the three I tend to listen to. They're very different, each of them are different. But like, there's a lot of excitement about what's coming up in terms of the storyline, right? Like, you've got like Primarchs are returning, gods are basically returning. There's like seemingly going to be a big clash coming. Maybe the Emperor's going to get up off his arse pretty soon. There's some cool storylines coming. You know, there was a story, The Infinite and the Divine, which looked at the Necrons, which are pretty cool. A lot of people like them as well. And seemingly there's like a lot of great content that's kind of coming through it. Like, Warhammer seems to really have got itself into a good story arc. Basically, you know, even the Eldar are starting to look interesting again, which is exciting. A few people, including Major Kill, most notably. So I think this is like, there is a really great universe here that deserves a lot of attention. I think people would engage with it because it is exciting, right? Like, you want the good guys to win. Like, who even are the good guys? It's not always so clear, and I think it's interesting that there's some moral ambiguity and some complexity that's coming up with the stories that doesn't always kind of revert to black and white stereotypes. So super cool. Anyway, I've been enough of a fanboy. These are the risks and the opportunities as I see them. So let's have a look at some pricing next. Alright, so price estimates. First of all, it's not super well covered, this stock, even though, like I say, it's a main member of the FTSE 250. I used investing.com and Yahoo and got 4 analysts. They are pretty bullish. All of them have significant increases on, you know, closing price of like 89 quid or whatever it was from the 14th. Also, Simply Wall Street here, they're not included in these 4 analysts, but fine, I pulled them out as well. And you can see here they're similar. They're very slightly below the lowest analyst forecast of those 4, but similar in the ballpark. Interestingly, I also have a target price here of £120 a share. Very slightly on the lower side. I use DCF, which my understanding is also what Simply Wall Street use. I basically just looked at the last 5 years, projected that forward on a basically identical basis. You could argue that's too hopeful. You could also argue, though, it's too prudent, right? Like, it depends what kind of argument you want to have. As always, when you're plugging in these numbers, right, it really depends how what assumptions you're making. So I have assumed that they will continue to be at least as good as they've been in the last 5 years. I don't think that's unreasonable though. Maybe it is, especially because obviously the last 5 years will have the COVID stuff, the COVID lockdown, where Games Workshop are perceived to have been a big winner. So maybe it's overdoing it. So obviously, you know, do your own research and all the rest of that stuff. But that I actually think you could take the opposite approach, where you actually argue, you know, there's a lot of cool stuff in the work. Licensing could become a thing, right? And again, licensing from Games Workshop's perspective is basically pure bottom line. So yeah, okay, they're going to have to spend some time kind of, you know, reviewing things, working on products, etc., making sure the lore is consistent across multiple things. But what I've noticed they're starting to do with their lore is, you know, like they keep it separate. So like if you look at things like, I'll give you an example, like Necromunda, right? Like this was a game on one planet. So okay, one planet out of a million, great. It's basically like a criminal gangster planet, you know, not very nice place to live, and it's kind of, you know, okay, it doesn't impact on the main story arc of what's going on, right? No one really gives a damn, you know. There's kind of there's mention that, you know, millions of people are being shipped off to go and serve in the Imperium, and, you know, to serve in the infantry and stuff. Okay, fine. So it takes part in a big, wider world, but it doesn't impact that in any way. Likewise, stuff with like Warhammer and like, you know, like NFL games, these kind of things, it doesn't really impact. So it's a very kind of like lore. It's de-risking any kind of like inaccuracy sneaking in, where again, like Games Workshop has taken efforts to make sure that's the case. So I think there'll be more of the same. I think Eisenhorn is a bit more delicate, but the source material is already there. It's not like you're making it up, so it should be, you just have to adopt that basically. So again, I don't think there's too much risk there, and I also don't think there's too much cost. So I basically expecting Games Workshop to have realized that there's some good money to be made in licensing, and maybe likewise, you know, just projecting forward 5 years, what's happened in the last 5 years won't be ambitious enough. So you know, if you're optimistic, pessimistic, I just went in the middle because I think that's fair. So that's all I have to say on the matter, I guess. Alright, so in conclusion, whilst the results left many disappointed, honestly I feel the drop was overdone. When I first saw this and I was like, you know, I heard that the earnings have dropped, you know, I basically just checked out a few websites. Oh my, you know, should I buy some more? And then I took the time to read a 20-page document, and I don't think they're that bad. Like there's an expectation that Games Workshop is infallible, or that it continues to grow at the pace it's been growing at. I think that's unrealistic. I think it was a perfectly serviceable set of results. Maybe it should have fallen a little bit, but honestly, I mean, I already felt like the share price wasn't exactly up with current events. So to have it fall back, I mean, maybe I'm just wrong. But for me, you know, like I did start this video with the genuine intention of being like, you know, I'm pretty sure I still want to buy Games Workshop, but let me just double check, right? I don't want to be really wrong if I'm going to make like a more aggressive move into Games Workshop. And then as I like read things, I just became more and more convinced that this is like verging on a bargain. I mean, it's still like, you know, 23 PE, so it's not like the valuest stock you've ever seen. But again, this is a very profitable company that has consistently shown itself to be efficient, well run, good at growing, etc. And, you know, maybe it's now witnessing some growing pains, maybe it made some mistakes, but I just think the current share price doesn't reflect what the company is worth. So for me, it's going to be a very clear buy. Just to walk you through a little bit more of that detail as well, I think the reduction in the earnings is very explainable. Yeah, there are definitely those areas for improvement. There's also those external factors that we think of, things like freight, certain raw materials, you know, like political situations regarding, you know, tariffs, import taxes, etc. Okay, but you could also argue that those things should be improving in 2022. So again, maybe we won't see such a variance and such a impact on costs. Not sure. That's generally the consensus though from what I've been reading. Likewise as well, his revenue rose, and although it's less impressive than the year before, it's against really tough comparables, right? Like as Games Workshop themselves say, this is still the second best year they've ever had. It's generally a good direction in travel. The issue here is the fact that the earnings weren't as good as people were expecting, basically. And, you know, not too long ago, Games Workshop was at like a P of like 40, 45 actually. So these results potentially, yeah, okay, whilst not stellar, I just think there's now the best opportunity in years probably since the big crash in March when COVID was a thing, to buy, and that's kind of where I got to. Yeah, okay. There's also the risks with 3D printing, genuinely a risk, as well as alienating your community. I'm glad that Games Workshop seems to have finally realised the latter. I hope their engagement significantly improves. Honestly, I think they need a team of social media savvy people. It's rare that I say that, by the way. Like, normally I think social media type people in big companies just don't deliver any value effectively. They're kind of risk adverse. They act as like a drag on investment and risk and genuine engagement, and they just sap the life out of a business. Sorry for that little mini rant there, but that's generally how I feel. However, here I struggle to think of a clear example of where a business is lacking a social media team, basically. And I would almost like a kind of director of customer satisfaction or something, right? Customer experience director, right? Employer, genuinely somebody who sits on the board whose job is to look after customers, right? Like that to me would be the best thing I could see. And obviously they would manage this team, or somebody in their team would, and show that you're really committed, and that you've reflected, that you've learned, that you've made some mistakes. And again, have workshops with people who are well respected, like fans who are well respected and who have big followings, right? Invite them to take part, genuinely listen, and again, make sure that the person who's ultimately accountable for this is a senior stakeholder, ideally on the board. I think that's where it needs to be. I think that would be a huge improvement for Games Workshop. And like I say, I think if you could manage that properly, the 3D printing problem more or less goes away. I think the kind of people who are engaged with this hobby want the real deal. I do. I know that isn't what people are saying, because it's way easier to be a Cassandra than actually say it's going to be okay. But that's how I feel. I don't think 3D printing is the problem that people imagine it is, as long as you can get your engagement sorted, basically. So yeah, that's that. So I guess, long story short, company continues to grow. It makes money. I think it's well run. I'm expecting to see a bounce back, basically. It yields well, although it's not guaranteed, but still there's a lot of promise there. I think it has a lot of upside potential at current price, basically. I think the risk reward is very clearly in favour of a buy. So effectively, although I don't plan on adding any more money to my portfolio in January, once I do have funds again in February and onwards, I will basically be buying Games Workshop. For me, it's one of the clearest buys in my portfolio at the moment, probably the clearest buy. I think there's at least a 30% upside on what we're looking at right now, and I just think for a good company like this, I think it's worth the current level. So again, I mean, maybe in 6 months' time we'll do another video and we'll see what their last 6 months look like, and then in a year as well, and we'll see how many shares I have then and how well they're doing. But for me right now, I'm going to be buying more. So obviously do your own research and all that other good stuff. Hope this was interesting. These are long, I appreciate, but it is what it is. If you like this kind of stuff, then obviously keep watching. If not, maybe I'm not for you. That's okay too. But I think what is for me, at least, is Games Workshop, and I think they deserve a review, basically. That's all I have to say, though. So hopefully that was interesting. Comment, like, all that other good stuff. That'd be great. Otherwise, thank you very much for watching, everyone. I realise this is a very serious investment of your time, and I really appreciate it. So good luck, have fun, all that other good stuff. Bye for now.